The Reserve Bank of Australia and its overseas counterparts have been shouting for a while that interest rates might have to stay higher for longer. But it seems investors have only just got the memo, which is why share markets have recently been doing pretty badly. But house prices are going the other way due to a higher than expected immigration surge. Housing affordability hasn't been this bad in ages. According to analysis from AMP, a typical person's capacity to buy a home has dropped by nearly 30% since April last year. And that's assuming they've got a 20% deposit saved up, they're earning an average full-time wage, and are spending a quarter of that repaying the bank. Now, speaking of banks, the Reserve Bank is meeting tomorrow and a rate pause is the most likely outcome. But markets are betting the RBA will cut rates by the end of next year, which could also boost house prices to new unaffordable heights. Meanwhile, the local share market slipped by 0.2% on this quiet trading day, though shares of Liontown Resources rose moderately after mining billionaire Gina Rinehart increased her stake in this lithium company to 12.4%. Just as it's about to be taken over by a much larger US company. Overseas, Wall Street fell slightly just before US politicians reached a last-minute deal to avoid a government shutdown, while most Asian markets were closed for a public holiday. In commodities, the price of gold is down while oil and iron ore prices rose, and the Aussie dollar is slightly weaker. It's down below 64 US cents. And that's finance.